In today's video, I'll be showing you the best brokerage platforms that allow you to buy US companies from New Zealand. The most notable brokers that let you do this are Hatch and Sharesies. I'll be comparing the two based on brokerage fees, platform navigation, and the quality of companies they allow you to invest into. These are two great investing platforms with their own pros and cons, and by the end of this video, you'll be able to make an informed decision on which one is best for you. Firstly, starting with Sharesies, this Kiwi broker lets you invest both in the New Zealand, Australian, and American stock market. It gives you access to individual companies like big branded ones like Apple, Tesla, and Facebook, and then also different types of ETFs. For example, ones that track the overall market performance or those that are targeted at high dividend yielding companies. Sharesies has an easy to follow interface, letting you look at companies based on their dividend yield, the ones that have had the greatest returns or those with the biggest market cap. Sharesies is very beginner friendly and it doesn't require any investing or stock market experience. It's targeted at people who are new to the whole idea of investing. With Sharesies, the brokerage fees are based on a percentage of your investment, and basically a brokerage fee is the amount of money that you have to pay when you buy or sell a company. With Sharesies, because it is based on a percentage of your investment, this creates a very low barrier to entry, meaning that you get charged virtually nothing for investing very low amounts of money. As you can see here, you get charged 15 cents for just investing $30. So the way this works is that up to $3,000 you get charged 0.5% of your investment, and then any money exceeding $3,000 you get charged 0.1%. So as a practical example of what this would look like, you can see down here that if you were to invest $6,018, you would pay $15 because you are charged 0.5% for the first $3,000 that you invest, and anything after that you would get charged 0.1%. So in total, for investing $6,000, you get charged $18 worth of brokerage fees. This makes it much easier for people who are getting into investing and only want to put in small amounts of money to get started, because you don't have to really pay anything to put in a small amount of money. Also, when you sell shares of a company, this brokerage charge is also applied, so you can factor that in when you're buying and selling a company to see what minimum percentage gain you would need on your investment in order to make a profit. Also, to keep in mind when you're buying US based companies, there's also a 0.4% foreign exchange fee to convert your New Zealand dollar into US dollar. So just keep that in mind when you're making these investments, and you can start to tally up the fees that you would pay when you are using the platform. If you want a bit more information on the fees for Sharesies, I'll leave them down below, linked in the description box. Of note, there are no annual membership fees for Sharesies, so all you're paying is the brokerage charge. When it comes to buying shares using Sharesies, there's a few different options for you to choose from. So first of all, there's market buy order, which is just buying the companies at the set price. So if you see that the stock price of Facebook is $300 a share and you execute a market buy order, then you will just be buying those shares of Facebook at $300. Keep in mind that if you're buying a volatile company, the time that it takes for your order to be processed and the transaction to actually go through, that the price of that company might have changed. Because if a company is, say, trading at $100 a share, but it's been fluctuating 20 to 30% going up and down, then just because you purchased it at $100, you might end up getting it at, say, $105 or $110, or might have dropped in value to, say, $95 or $90. Because when you buy the company, you've just sent the message or sent the request that you want to purchase it, and there is a processing time where this order is actually approved, and then during that processing period, the price of the actual company can fluctuate if it's very volatile. If it's nice and stable like Facebook or Google, then most likely you won't have much variance in terms of what you've set your purchase price to be. There's also a limit buy order where you set the maximum price for the company that you want. So if you think that a business is going to have some momentum behind it and is going to be increasing in value, then you might want to set a limit buy order. And this means if you think that, say, Facebook shares are going to jump from $300 to $320 and they've got some momentum and you only want to buy if the share price is increasing, you can set a limit buy order, and then the shares will only be purchased if that price is met. So this can be good if you want a set and forget strategy with your investing and you only want to buy a company if it's growing in price, because you can just set the limit buy order on your phone and then you don't have to constantly be checking the share price and waiting for a good opportunity to buy in when there's some momentum in the price of that stock. Sharesies gives you some financial information about a company, like a graph of the previous stock prices for that business, the PE ratio, the market cap, the dividend yield. It also gives you a risk assessment rating for the company, but overall I would say that this stuff isn't really the be all end all of your investing. You don't really do very much research on a company on the brokerage platform, so you don't take too much notice of the risk rating for the business. It's not going to give you a clear-cut indication on whether or not you should invest into that company. When it comes to topping up your account, you can either do this through a bank transfer or a credit card. I would say 100% go with a bank transfer option because the credit card fees can eat up your money. When you top up $1,000 with your credit card, that's $27 that you have to pay in terms of credit card fees, and there's a cap at $1,000 that you can top up with your card, whereas the limit for bank transfers is much higher and there's no fees associated with it. And when you set up a bank transfer, it takes about 1 to 2 days for the money to hit your account, and there's just a specific account number that is unique to your own Sharesies profile that you pop in on your internet banking app, and then you can transfer your money through to Sharesies. And this process is exactly the same as if you were transferring one of your friends using internet banking. Sharesies also has a referral program, and this gives you $5 when you first sign up to Sharesies using someone's affiliate link. I have mine down below in the description box. So that covers Sharesies. Now moving on to Hatch. With Hatch, one of the most notable differences is that there is a flat brokerage fee for buying or selling your shares. This can be either a good or a bad thing depending on how you look at it. I would say overall it's a lot more beneficial that Hatch has a flat brokerage fee, and looking at the Hatch's website, the reasoning for this is because that when you sell a company, Hatch takes a much smaller profit of your investment total, and this is because they want your investment to grow over time, to gain value, and for you to be able to add more to your portfolio without receiving a penalty for it. And this creates a fair playing field because everyone is charged exactly the same for buying and selling your shares. So with Hatch you get charged $3, and this lets you buy 300 shares of a company, and anything over 300 shares you get charged 1 cent per share. So if you bought 305 shares, you would get charged $3 and 5 cents, and that $3 charge equates to about $4.20 NZD, so it's a very cheap cost in order to buy or sell shares of a company. As you can see here, this is a practical example of what it would look like to buy and sell shares using either Hatch or Sharesies. So the example is that you invest $500 into Apple. With Sharesies you would pay 0.5%, so there's $2.50, and then with Hatch that's $3, so about $4.20 NZD. And then once the price of those shares increase and they gain more value, then when you sell on Sharesies you will get charged $11.64, whereas with Hatch you would just again get charged that $3 price. So you can see overall that it would be cheaper on Hatch to buy and sell a company, even though the barrier to entry seems a touch higher because it's a flat fee. And this brings me into the point that with Hatch it's not worthwhile to invest small sums of money. If you just invest $30 with Hatch, you'll get charged a $3 brokerage fee, which right off the bat is over 10% of your investment. So that's 10% of money that you have to make back in the stock market just to even break even on the brokerage charge. So with Hatch it's always better to invest larger amounts of money, say $300 plus, so that you always are only paying 1% brokerage fees. There's also a 0.5% foreign exchange fee for transferring your New Zealand dollar into US dollar, and with Hatch you can only invest in American companies, so there's no chance of putting your money into the NZX or ASX the same way that you can with Sharesies. And also, if you're thinking of setting up an automatic payment plan with Hatch, do not have it as a weekly investment because you'll have to pay a lot of money on those brokerage fees that will add up on a weekly basis. Instead, do it monthly, and you always want to be paying 1% brokerage fees. So ideally every month you would want to be putting in a minimum of $300. This is only if you want to have an automatic investment plan, otherwise you can just save up lump sums of money to put into Hatch. Hatch is also a very popular platform with 130,000 active users. It's a fair bit smaller than Sharesies, but again a very popular and growing platform for New Zealand investors. Again, the top up process process for your account is just the same as Sharesies. You can do it with a bank transfer or a credit card, and the processing time is very much the same, again 1 to 2 days. And withdrawing your money from Hatch is also very straightforward, also same as Sharesies. You just have to sell the shares of the company that you own. This takes about 1 to 2 days, and then the money will be in your Hatch account, and then you can withdraw it into your personal bank account. This again takes another 1 to 2 days for it to all go through. So if you need your money quite urgently from the shares that you have invested, do factor in that processing time and give it about 4 days for it to actually go from the shares being sold to the money in your own personal bank account. And again, there's no fees for withdrawing your money. There's just the $3 USD brokerage charge for selling your shares. Navigation is all very similar to Sharesies as well. It gives you access to all the American companies that you want with all the same level of financial information as Sharesies, so there's not a massive difference in terms of the navigation between the platforms. Again, with Hatch there's also a sign up bonus, and I've been lucky enough to get in touch with Hatch, and they've kindly given me a referral link that will give you $20 when you first sign up to Hatch and top up your first 100 NZD. So check that out down below in the description if you want to make some free money from Hatch. In terms of taxes with Hatch, there's a flat $1.50 USD charge when you first sign up to Hatch to get your taxes sorted, and this is deducted from your first investment. And then after that there's an annual charge of 50 cents to get your taxes looked after through Hatch. 90% of the time there's more or less nothing that you have to do to keep your taxes above board. The only time you ever have to do anything from your end is if you receive a dividend payout that's more than 200 New Zealand dollars, or if you're investing more than 50,000 NZD using Hatch. If you are in either of these two categories, get in touch with Hatch and they will be able to help you out and give you the necessary information that you need to make sure that you get your taxes sorted properly. In regards to paying tax on capital gains when you sell an investment, I've personally reached out to Hatch in order to check if there's any tax laws that you need to keep in mind for this, and they said that IRD doesn't have any set time frames on what is considered trading or any minimum amount of time you have to hold a company before you get hit with any special tax laws that are considered trading or short selling of a particular stock. They said they haven't had anyone get in touch with them related to any issues for trading companies, and it's a bit of a grey area in terms of what IRD considers a trader. I would say overall there's not really a lot to worry about in terms of short selling companies or just doing a bit of day trading from your end. If you do want a bit more information about this, you can get in touch directly with IRD or a tax advisor, but it's personally I've never had any trouble with, so it's not something that you have to keep on the back of your mind that you're somehow going to get in trouble with your taxes if you're using Hatch. A nice feature that Hatch gives you is that any uninvested money sits in a money market account. This is essentially just an investment fund. They can get you a very low amount of interest on your uninvested money, say anywhere between 0.3 to 0.6%. The money market fund that Hatch uses is the BNY Mellon Money Market Fund, and this has had a historical return of 1.8%, and in terms of the year-over-year return that you get from this, anywhere between 0.3 to 0.8%. And you can see here some of the different types of investments that make up this portfolio. So you're not going to make a massive return from the uninvested money you have sitting in your Hatch account, but it's nice to know that it is being put to work and can gain a little bit of interest for you. So I would say that overall Hatch is a better platform than Sharesies because of the lower brokerage fees, and this means that you won't have to pay as much money on the profits from your investments. Of course, if you're someone that's interested in buying New Zealand or Australian companies, then definitely go with Sharesies, because the only other way to do this is through ASB securities, and the fees for this are way too high and not worth it. So just stick with Sharesies if you're interested in the NZX or ASX, but I would say definitely Hatch is the preferred platform that I like to use. Everything else between them is pretty similar besides those brokerage charges in terms of navigation. Now that you're familiar with Hatch and Sharesies, you might want to know how much money you can make from investing. Check this video out on screen to see how much money I made in my first year investing with Hatch. It'll talk about my portfolio, some of the things that I learned along the way, and my future plans for investing. Check that video out so you can learn from some of the mistakes that I made, and these are things that I wish I knew earlier because it would have saved me a ton of time and money.